Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics and sectors looking for investment opportunities and sharing that with everyone in the community. We do have Q&A sessions on the weekend over Zoom where you can interact with me directly. I also do midweek updates released Tuesday night, Wednesday morning. They're midweek updates on all of the opportunities for individual companies that I see in the market and maybe even ETFs. The coupon codes in the lower corner there are special, and it works with both the monthly and yearly membership. So Lawrence McDonald says the stock I want to stay away from at all costs is the hottest stock in the hottest sector, says Peter Lynch. Those are FOMO people. The FOMO people go chasing the hottest stock in the hottest sector. And you know what? That's what they talk about. They talk about the hottest stock in the hottest sector. I was at the grocery store not too long ago, and they were talking about two things. What were those two things? Crypto and Nvidia. Those were the two hottest stocks in the hottest sector, and that was a little while ago. The dude says, "What do you think has the best chance to 2x? Gold, Bitcoin, silver, copper, or platinum?" Honest question. Well, Bitcoin has a large fractal, so it very well could go way up. That is a possibility still. From what I believe and what I am drawn to, which is hard assets, things that build wealth in society, the things that people want to buy, computers, which require materials like oil and silver and other things. I think the thing that has the best chance to 2x in the shortest period of time from its bottom would be silver, platinum. Copper could easily 2x here. It just broke out. And I think oil looks really good. So all of them look good. Now, rather than trying to guess which one has the best chance, let's say, whatever is cheap and has a very good setup is what I would invest in. I wouldn't constrain myself to one sector or another. That's not how I would invest. I have investments in gold, silver, copper, platinum, oil, coal. I mean, even coal looks really good. Lithium. There's a variety of options out there. Palladium. They all look good. And I'm not trying to guess which one's the best. What I'm doing is I'm positioning for outcomes. And if something's really cheap and I don't know exactly what the future looks like, well, then I'll position some money across the sectors to capture the gains of whatever those gains are. The asymmetry, the risk reward in the bet is what carries the portfolio higher. And I don't have to guess wrong. Some people, what they try to do is they try to put all their money in one sector. That can work very well if you get the correct sector right. But sometimes you'll see another sector outperform versus the sector maybe that you're in, and then you want to try to swap and rotate over, and you get all sorts of crisscrossed. A better approach, in my opinion, is to identify, let's say, a few companies in each sector. If all the sectors are very attractive, I would invest across those best companies or equities, or even in the physical metal itself, across the sectors that are all incredibly cheap. And then I can ride it. If one sector isn't going up and another one is, I'm capturing those gains. And sometimes they flip-flop. It also smooths out the portfolio. As some go down, others go up. As others go up, some go down. So it just smooths everything out. And I think it's an easier ride, and the asymmetry carries you up. So which means the down pullbacks aren't as big as the upside moves, which can be many, many fold. Sometimes they occur very rapidly. Sometimes they take time. And that's what we don't know. We don't know when other people are going to buy the stock that you are in. I mean, that's essentially what you're doing. If you're breaking it down, you're trying to guess when other people are going to buy your crap. That's really what it is, when it's going to come into favor. And what I'm doing is I'm saying, okay, what's out of favor? I buy up when things are out of favor because that's what creates the attractive undervaluation. And then I just sit and wait. I wait for sentiment to change, for other people to buy my crap. I mean, that's basically what it is. This is silver in Shanghai, 39.22. It's up 1.74%. I don't remember seeing silver anytime at $39 plus. Silver's going to rocket here, guys. And they're soaking it all up over in the east. They're going to squeeze silver. They're going to squeeze gold, platinum, palladium. And it's not just them. I mean, we are completely recklessly printing cash like nothing. It's absolutely ridiculous. Just print, 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 print. Of course, people are going to run to things that preserve wealth. Just imagine when Americans start to do it too, if they have the money to do it. Iron ore soars as China pledges crackdown on industrial overcapacity. We've got Eric Yoon here. The EFP doom loop will probably go into hyperdrive. Says normally they, the banksters, would just cash settle their COMEX LBMA trade pairs via EFP paper to paper. But now the paper gold promissory notes prices at the LBMA are below the prices of COMEX gold futures. So it is cheaper for them to stand for delivery of the physical gold at the LBMA and deliver that to the COMEX. The EFP doom loop. So EFP cash settlements are now losing money for these banksters. LBMA physical gold deliveries are now at least 4 weeks, maybe 8 weeks. So they might not get the physical gold to deliver to the COMEX to close their COMEX paper gold shorts. If they have to paper short cover the price of gold futures at the COMEX, it will shoot up because they have to buy equivalent long gold contracts at the COMEX to cover their COMEX paper gold short positions. For as the COMEX LBMA gold price spread increases and physical gold at the LBMA becomes more scarce, more banksters would want to deliver physical gold to the COMEX to settle their COMEX paper gold short positions because they will take a huge paper loss if they choose any other option. So the EFP doom loop continues. There's going to be a shortage on physical, guys. There's a lot of paper out there. This is going to squeeze like no other. It's going to be fantastic for those that are participating in it. Eric Yoon says, I literally laugh in my sleep. My wife thinks I'm crazy. It's just getting started, baby. All right, coming back. Jay Hinster, so this is SILJ divided by silver. So it's silver junior ETF divided by silver, the price metal itself. We have just begun to rally here, guys. SILJ's just taken off. It's probably going to do something really crazy. Silver took a big move right in the beginning. And then we saw oil and a lot of these other commodities rip shortly thereafter. So this is what I think is the beginning of the commodity boom. I'm a little bit afraid. I'll admit it. I'm a little bit afraid. I'm not afraid that I'm positioned, I'm positioned for all this to play out. I'm afraid because the patterns are massive. And big patterns produce big moves. Now, if we're breaking a 45-year cup and handle pattern on silver, and we're going to launch this thing, and let's say we launch it in copper as well, because copper is breaking a 20-ish year pattern as well. Gold's already broken out. Uh, when I look at oil, oil is sitting on top of its consolidation. It's going to run too. What exactly does 5 years look like from now? Will I even recognize what this world looks like? Will it even be remotely the same as what I'm living today or a year ago? Because 5 years from now, things could look way different. Um, and yes, I am positioned for this, but still, it scares me a little because, I mean, the money's in the system. It just hasn't rotated into hard assets. It's all over in financial garbage. You could even say it's over in crypto. Nobody wants crypto. Nobody wants the financial crack. What they want is they want stuff that they can purchase with it. They want final payment. So dollars and investments and all that stuff, all it is a claim on a future experience, is really what it is. It's an experience from buying something or an experience of travel or whatever it is, a family vacation or family experience, whatever it is, food. Nobody wants the item. It's just an investment vehicle, perhaps. Now, if you're investing in all the stuff that people want, because that's final payment, it's not dollars. You can get dollars, but that's not the final payment. The final payment is when you exchange those dollars for something that is useful, a good, a service, an experience, whatever it is. Now, if we're going to run these things to the moon, and the things that are running are all what go into final payments, what exactly does that mean? How do we preserve our wealth when this occurs? Now, some people will say, oh, that occurred in the 1970s. We had a big inflationary move. No, it did not. What they did is they raised interest rates and slowed the monetary bank lending, which is what was occurring. Today, they can't stop it. And again, that's the quote, nothing stops this train. If nothing can stop the train and people want final payment stuff, well, that's where you need to be. Final payments is all of the commodities or energy that creates a final payment, a computer, um, commodities themselves, like water, oil, uranium, whatever it is. And then all the things that go into the products. That's all final payment, is what I mean by that. But what's coming, this is going to be ridiculous. It's not going to be like this. I think it's going to be something that is much more profound than anything that we've seen in the last 40 years. Kevin says the USA's budget deficits are driving nominal gains in all asset classes. That's what they can't stop. They can't stop that. And that's what scares me. Like, and I'm not like scared like I'm scared for my life. I'm just scared that when this money moves, it's gonna price people out of things maybe forever. Those that are kind of middle class, and I don't know how they're going to take that. And that's what scares me. It's other people not being prepared for getting wiped out, basically. And there's nothing that's going to stop these budget deficits, at least in the short term here. A lot of it is rooted in like Medicare, Medicaid, and all these pensions and retirement plans and Social Security. It's all these safety nets that we literally need to just get rid of. And I know that's not a popular thing, but it's bankrupting us and it's about to eat the currency. Gold price subsequently cooperated. Will oil? I'm positioned that it will. I am too. Gold's broken out, silver's following, platinum's following, palladium's ripping, everything's ripping. Copper's about to just go to the moon, and oil's going to follow. That is what I'm betting on too. He's positioned that way, so am I. Oil is in everything. In fact, I would argue that oil is the most important commodity in modern civilization. It's one of steel, concrete, oil, ammonium. There's a couple things, right? But oil, it's in everything. The thing is, I mean, it's in everything. It's in transportation. It's in jet fuel. It's in diesel. It's in um, plastics, paints, lubricants, thinners. It's in our fertilizers. It's in frickin' everything. So, yeah, imagine paying $118,000 for a set of man-made numbers. Well, that's what people are doing. That's what people are doing. And here's my opinion. And again, I don't know if this is true or not, but I think it was created to absorb liquidity. And I think it's a way to divert cash away from real things. In the end, I don't know what that means for those that own that stuff. I don't think they're worth anything. I'd rather go buy what everybody wants than what everybody is chasing. Everybody wants a computer, an iPhone, a car, or whatever it is. They don't want man-made digits. They just want it because they think that it will buy more in the future. And I'm questioning that it will. I am not a believer in it. Now, some people will say, well, look how much it's gone up. And that's exactly what FOMO is. FOMO is chasing price performance, and everyone is doing it. Does that mean that it is legit? No, it doesn't. Does not mean that it is legit, in my opinion. My pin post, silver will be gold on steroids. Let's go check it out. It says, let's get something straight. Most regular people don't own a significant amount of physical gold, bullion, compared to sovereigns and central banks. Precious metals price suppression is a game between countries. They don't care about the tiny number of small people who own physical gold. Gold price revaluation will screw over most people in the world, except for a few physical gold owners, because it is an act by central banks and sovereigns capturing productivity from common folks to write off their debts and finance government. Most small investor people are invested in miners, which are physical gold proxies. When physical gold becomes difficult to get or unavailable, and GLD gets exposed as BS, miners will fly because they are the only gateway for the mass public to be exposed to physical gold's upside. There you go. Gary Ross says supply to market is the appropriate way to measure OPEC crude oil production. It is OPEC's standard definition of production. If producers increase production to move production closer to market, but not supplied to market, it should not be counted as production, according to OPEC. There's a whole bunch of things going around with these quotas. So we increase the production quota, but that doesn't matter if they don't actually produce and it gets its way to the market. It's just a quota. Kevin Bamborough said the MACD just crossing on silver. The relative strength indicator also broke 70. As per my recent article, we are likely to be entering a period of sustained upside where the RSI will push higher repeatedly as a major squeeze takes place in silver. The time has come when your investment thesis holds. Lean in with confidence. Since mid-2019, we've been aggressively acquiring what we saw as undervalued assets with strong silver exposure, consistently backing our conviction in the metal. At times, it felt like a lonely stance, but markets always have the final word. More importantly, this is still one of the largest cup and handle formations I've seen in my career. Cup and handle that's going to break here in silver. That is what scares me a little bit. What exactly is coming that's going to launch this thing to the moon? Generally, it is a devaluation of the currency, and it's people shifting money away from bonds and stocks and into precious metals and commodities during those during those market conditions. So it scares me because this is a gigantic pattern. It only comes once. This is it. You're gonna have one opportunity in basically your life to load up and ride this thing. And here we are. We're right there, ready to go. Logan says foreclosures and new bankruptcies are still below pre-pandemic levels. Foreclosures did rise in the last quarter, but they're super low. So we don't have forced selling in the real estate market. This is not like 2008. All these guys talking about forced selling, no, it's not forced selling. Now, will people lower prices maybe? Sure. If they need to sell a house and they can lower it some, yeah, that's going to occur. But we're not in the forced selling where people are underwater. That's not the case, at least not right now. Great Futures AM update. We had some big moves in dry bulk. Capesize was up 7%, Panamax up 5%. Tankers were flat for both VLCC and Suezmax. And that's what we've got for today. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel if you'd like. Special is the coupon code. And that's all I've got. We've got a Sunday question and answer session coming up at 5 p.m. Mountain Time. So we'll see you guys there. We'll talk about ways to play all this stuff. And hopefully I'll see you there. See ya.